Well, we did it. We made it to the end of 2023. 2023 is now in the rearview mirror. We're looking forward to 2024. When I started this YouTube channel, I wanted to inspire people to invest. And I also wanted to let you see what I do, not so that anybody would copy what I do, but maybe it would give you an idea of what to do in your portfolio, or maybe some ideas for your portfolio. It also might give you ideas on what not to do in your portfolio. But I wanted to give you guys a glimpse into what someone else does so that you can have that as an example, maybe to pull some ideas from. So today we're going to take a look at how we did in 2023. We're going to compare the portfolio against everybody's favorite ETF, which is SCHD. But we're going to go further because at the end of the year, we want to really take a good look at how we performed in 2023 to see if there's anything we want to do differently in 2024. We're also going to compare it against the S&P 500, and we're going to compare it against a well-known dividend growth ETF. And then after that, we're going to talk about what we did well in 23 and what we want to do in 24 to make any adjustments if necessary. Benchmarking the performance of our portfolios is really important, and it really leads us to make better decisions. So that's what we're going to do today. And without further ado, let's get started. This time of the year is really fun because people are looking in retrospect at 2023, at the prior year, and they're also making goals for the next year. And it's just natural to do that. And we should do that the same for our portfolios. But to know if we need to make any changes to the portfolio, we need to see how it performed. We need to understand if it's meeting our objectives. And so to do that, I compare my portfolio against various metrics. So let's take a look at some of those. We have here first, as we always do on a weekly basis, we look at the portfolio compared to the Schwab US Dividend Equity ETF, otherwise known as SCHD. You can see here that the portfolio for the week was up 0.56%. The SCHD ETF was up 0.37%, so we edged them out this week. For the month, though, they ended up outperforming the portfolio. They were up 6.3% for the month. We were up about 5%. However, when I look at the 3-month and the 1 year, it was really no contest. We had a 3-month return of 10.6% versus SCHD at 8.7%. And we had a 1-year return of 17.27% versus a mere 4.57% for SCHD. So before we get into the other metrics, one thing I like to do is show what stocks did well this week and which stocks did not do well. So let's take a look at that. We've got our best performers for the week ending 12/29. Whirlpool, believe it or not, was up 2.2%, while General Dynamics, I own some shares of General Dynamics, it's also up about 2.2%. And the Hershey Company. Now, if you saw my video from last week, you know I have invested some money in the Hershey Company. So I'm excited that they are moving up, but I'm kind of also sad about that because that means that if I add more shares, I've got to pay more for them. Fidelity National Financial was up about 1.7%, while WEC, used to be the Wisconsin Energy Company, was up 1.5%. So those were the 5 best performers for the week. Let's take a look at the worst performers. EOG Resources was down 1%, 1.08. Kilroy Realty was down 1.05%. Now, Hess Midstream is a midstream assets company, and it was down 0.4%. Digital Realty Trust was also down 0.4%, and Lowe's was down 0.2%. So those were my top 5 best performers and top 5 worst performers for the week. Now let's move on into comparing the portfolio against other things. Let's take a look at it compared to the S&P 500. I'm using the Vanguard S&P 500 ETF as the benchmark, otherwise known with ticker symbol VOO. So VU is what we call it. VU's total return for the week was 0.35%, where the portfolio was 0.56. The month, the VU was up 4.58, where the portfolio was up 4.96. Now, for the 3-month period, our portfolio trailed behind the S&P 500. We were at 10.6%, where the S&P 500 was around 11.7%. And for the year, we were about 9% behind the S&P 500. You'll see that the VU total return was 26.32% for the year, and we were at 17.27. So at this point, let's ask ourselves the question, are we okay with that? Why don't I just invest in the S&P 500 and move on? Well, there's a couple of things we need to think about. Let's take a look at why my portfolio is positioned the way that it is. First of all, I want to produce passive income. And I produce passive income by picking stocks that allow me to sleep well at night, and also stocks that don't require a high level of effort on a daily basis. And the other thing is, I want to have lower downside volatility than the S&P 500, and I am willing to give up some of the upside to limit the downside versus the S&P 500. So how do I do that? I do that by picking stocks that are at fair value or below when I purchase them. I try to trim stocks when they get to 25 to 30% above fair value. Does not mean that I eliminate them from the portfolio. I just usually will trim them so that they come back to a smaller piece of the portfolio. If they then go down in value back toward fair value, I can then pick more of those shares up later. And then lastly, the dividend growth associated with my stocks provides a bit of a price floor for the stock because, take for instance, Johnson & Johnson, they are willing to pay a certain amount of price for Johnson & Johnson simply for the dividend. It doesn't mean it can't go down. It doesn't mean it can't go down a lot, but it will go down less than what other stocks in the universe are going down. So in other words, I'm okay not reaching the level of gain, especially when it's as high as it was this year, because I also know that there is a high probability that I'm not going to lose as much as the S&P 500. Let's take a look at some evidence of that. This is a screenshot from my video last year at the end of the year. I was putting a spreadsheet together at that point, and you'll see here that the year-to-date numbers for the market change in the portfolio was that we were down 2.5% on the year. And if you move to the right, you see that the dividends for the year were at 3.8%. So total return was up 1.2%. However, you see here just below that, the S&P 500 was down 20%. So the point of this is, while the S&P was down 20% last year, my portfolio only decreased 2.5%. So I am willing to give up some of those gains on the top end for some cushion on the bottom, if you understand what I mean, so that there's less volatility on the downside for the portfolio. Now let's take a look at one more comparison. I want to show how the portfolio compared with the iShares Core Dividend Growth ETF, which is the ticker symbol DGRO. Now, DGRO is an ETF that I have started using as a temporary parking lot for investing. So if I sell a stock, if I sell out of a stock, and I really don't have a good selection for an individual stock, but yet I don't want to miss out on the market opportunity, what I've started doing lately is investing that money into DGRO because it is a core dividend growth ETF, and that's what my portfolio is about. So looking at the performance, the portfolio again was up 0.56, whereas DGRO was up 0.54, so that's pretty close. For the month, we're also really close at 4.96 at the portfolio level, and DGRO was 4.91. Now, for the 3 months, we pull away a bit at 10.6% versus 9.4% for DGRO. And then for the year, we actually did very well compared to the DGRO. We were at 17.3 while they were at 10.5. So I'm really happy with where the portfolio ended up this year. We outperformed SCHD, we outperformed DGRO, but we underperformed the S&P 500. However, based on the way the portfolio's constructed, I'm okay with that. I'm okay with giving up some of the upside to give myself some cushion on the downside. One other quick thing I will share with you is the dividends that we've gotten. And these dividends are by quarter. This is the last 2 years in the portfolio. You see, we started out the year of 2022 at $6,342. So that's the first quarter of 2022. That went to 69.35 and then 81.81. And then we ended the year, the fourth quarter last year, with a quarter dividend of $9,159. We started out the year 2023 then at $8,412 in the first quarter, $8,829 in the second quarter, $9,409 in the third quarter. And guys, we blew the top off in the fourth quarter by passing the $12,000 mark for the first time ever in a quarter, with $12,228 in dividends. Real excited about that milestone. So I wanted to share that with you today as well. So I thought it might also be really interesting for you to hear what the high level emphasis for my portfolio was in 2023, and then also what I'm thinking about in 2024. These are not going to be detailed goals and objectives. This is really just high level stuff. So let's take a look at the major emphasis for 2023. My first one was I wanted to shift into more growth-oriented dividend-paying stocks. And examples of that are I eliminated AT&T and Verizon from the portfolio, but I then added stocks like Parker Hannifin, the Hershey Company, Graco to the portfolio. So you see what I'm doing there. I'm not getting out of some higher yielding stocks, but there are certain stocks that I decided to move out of the portfolio so that I could put some money into some of the higher dividend growth companies like Parker Hannifin, like Hershey, like Graco. So my second emphasis for 2023 was to reduce the number of holdings in my portfolio. You can see that I started the year with around 44 holdings in the portfolio. I'm now down to 35. That's a reduction of 9 companies, which is a little over 20% of the portfolio. So the number of holdings I have now are 20% less than they were beginning the year. So where am I heading for 2024? The first thing is I want to continue using my 5-pillar investing strategy. Now, if you're not familiar with my 5-pillar investing strategy, I will attach the video at the end that will allow you to go and see the video that I put together on the 5-pillar approach. It's a strategy that I use that has really served me well. So, I share that with you free of charge in that video. And again, it's not anything that I want you to copy, but maybe there are some things in there that might be helpful for your portfolio and the way you are designing your portfolio. So what's the second thing? The second thing is to continue reducing the number of holdings. I do want to get down to the mid-20s. Now, and again, 3 of those holdings are ETFs that I probably will never get rid of. So that means I'm going to have room for about 22 individual positions. I think that's probably about right for the portfolio. So I need to get rid of another 10 holdings. So that's going to be a little difficult because I really like the holdings that I have. And so I'll work through that through this year, but that's going to be one of the things that I want to accomplish in 2024. And then lastly, I want to continue using a DCA approach. I continue, even in retirement, contributing money on a monthly basis when it's available for the portfolio, but also my dividends get reinvested at this point. So I am continuing to dollar cost average into the portfolio, either through contributions or through dividends that come in from the stocks. Now, there's a special deal that I've been made aware of that I wanted to make you aware of. That deal is with Seeking Alpha. This is the same deal that they had around Thanksgiving. They have repackaged that for Christmas, and it started on December 27th and will go through January 5th. So if you're interested in a premium subscription to Seeking Alpha, it'll be available for a 30% discount, $167. I will have my affiliate link in the description of this video. If that's something that you're interested in and you want to follow that affiliate link, it will actually help the channel out. It'll send a few dollars our way and allow us to continue to provide the content that we're providing. But it's also a great deal. You get 30% off of the premium content. There are a lot of apps that I use, but I do use Seeking Alpha. They have some trending articles that are always really good to read. There's some analysis out there that is very helpful. So if that's something you're interested in, look in the comments below. You'll see a link to that, and it'll carry you over to their website. Now, one thing I was going to do is go through my portfolio, all the stocks in my portfolio. I am going to do that, but in a separate video. I didn't want this video to be way too long. And I also didn't want to be rushed through the portfolio. So I'm going to put together another video that I'll send out in another day or two that will actually just be focused on the portfolio. You'll get to see what my holdings are. You'll get to see what the weighting is in the portfolio, which ones are high, which ones are low. And so you'll get to see what my gains and losses are on individual holdings. So if you're not subscribed to the channel and you want to see that kind of detail, consider subscribing. I'd love to have you along for the journey. Ring that bell so you'll get a notification for when that next video comes out. So with that, guys, I'm excited about 2024. I'm glad you're here with me for 2024. We're going to have a great year together. We're going to grow our portfolios together. I look forward to it, and I will see you in the next video.